Timchang, I'd like to get your take on how the market has performed so far this week.
All right, hi Ken. So far what we've seen this week is an extension of what began last week, following the record gains that the market made last week. I mean, you'd expect that, given the kind of gain that we saw last week, Tuesday, it's logical to expect investors to want to pull back a little, take some profits from their investments, and all. But so far this week, I think what we've largely seen is we see the markets trade on a flat note for the most part, and that's because we find you still have buying interest on the one hand, you still have investors who would like to take profits from the gains that they take out the gains that they made over the previous week. You also have the excess liquidity, which I mean has really no alternative outlets for now. So really, I think that the pressure on both sides is balancing out. So that's why we're seeing that the market has been trading somewhat on a flat note this week. I would also want to add that it's also a reflection of, I mean, the lack of depth that we have in the market. So I mean, even as there's renewed interest in equities, you find that, I mean, the options are still limited even in the equities market. So how many stocks do you have that are fundamentally sound that you want to invest in as an investor? So these are some of the factors that I think have shaped performance this week in the equities market.
All right, about looking at that, like you mentioned, the heavy performance we saw that last week. Do you think that was a one-off, or do you think we could see something like that coming, say, next week or just around the corner?
Oh well, I would like to. I think that that will be a one-off. Although I mean, we expect that the sentiments will remain positive for the rest of the year largely, but I don't expect that we'll see the kind of gain that we saw last week and even the previous week. I think that what I think that the what caused that kind of gain was um, because of the sudden interest that investors showed on equities at the time. So there was like a positive drive at the time. So everyone wanted to put their money in equities at the time. But I think that there's much calm now, and going forward, I don't expect that we'll see that such record gains. So we'll see a lot more calmness in the market, although the sentiments will largely remain positive for the rest of the year.
All right, but sector-wise, which sectors are looking attractive from where you stand?
Oh well, I mean, I think that based on the H1 results that we've seen so far, I mean, quite a number of sectors performed. I mean, they defied the COVID-19 pandemic. The banking sector, for instance, showed very great resilience in terms of performance. I mean, it might not be. I mean, it might be lower compared to last year's performance, but I mean, given the pandemic, I think that the banking sector showed some resilience. Um, the telecoms, of course, expectedly, they were not, they were poised for a gain in they're poised for a gain from the pandemic. I mean, quite a number of sectors also did well. So I don't think that it's a question of what sectors. I think that there are gains across sectors. I mean, it's just a question of the limited number of stocks in each sectors that are fundamentally justified at this time. So really, I think that it's not a question of what sector. The sectors so far we've seen from results have shown some resilience in their performance. So it's a question of which ones in the sectors, I mean, are fundamentally justified to invest in at this time.
All right, but on the banks, though, what are your expectations for the 9 months earnings, looking at the operating environment we are in at the moment?
So I think that the worst is behind us now, as far as the 2020 financials are concerned. I think that the worst is behind us. Like I mentioned earlier, the banks, for instance, have been able to show great resilience, and I mean, I think that I mean, in terms of earnings, we're not expecting that we'll see. I mean, we're expecting an improvement. We're not expecting that we'll see the look of I mean, the kind of performance that we saw in H1. I expect that across sectors. I mean, the environment is much calmer. The worst is behind I mean, the worst for the economy is behind us at this time. So I mean, I think that we should expect better performance in nine. And it might not be so great, of course. COVID-19 has impacted a lot of things. I mean, when you take it on its summative basis, but I expect that. I mean, if you take Q3 standalone, you'd find that, I mean, there's a lot of improvement. So when you take it overall, when you take it overall, when you take 9M performance, I mean, you should see that in spite of the pandemic, I mean, the companies are expected to, I mean, do well.
All right, but when you look at the inflation data that we're expecting tomorrow, what's your house call?
So I mean, we expect that the price level will remain pressured. I mean, the uptrend is still there. We're expecting that inflation will get up to about 13.49%. The factors basically are still the same. I mean, we have, if you look at it from a more macroeconomic perspective, you have a very strong imbalance between aggregate demand and aggregate supply. So you have aggregate demand strongly outweighing aggregate supply. So I mean, when you look at the factors driving demand, of course, the sustained border closure, you have the expansionary monetary stance. I mean, you have a lot of credit in the economy. You have a lot of money. I mean, the release that many people got from the pandemic and all that. So these are factors that are pushing demand. On the other hand, you have supply seriously constrained. You have you have particularly on the food segment, I mean, we've seen this sparse rainfall in some parts of the country. We've seen flooding. So, I mean, geographical factors affecting food supply. You have manufacturers not, I mean, having difficulty securing forex liquidity to fund their production and all that. So when you put this together, you find that there's a very strong imbalance between aggregate demand and aggregate supply. So we expect that the inflationary pressure will be sustained. And like I said earlier, we expect inflation coming at 13.49% for September.